We have Gerry Beaney, partner and head of capital markets for Grant Thornton, a leading financial and business services company. We'll be discussing the role of a nominated advisor for AIM companies. Now, Gerry, what is a nomad and what does a nomad do?
Perhaps I could put that in context a little by giving you some history of the AIM market, or alternative investment market as it was formerly known. The AIM market was created in 1995 by the London Stock Exchange, and it was created to be deliberately different from our main market in London, with a focus on smaller growing companies. So, for example, companies coming to AIM didn't have to have a 3-year trading record. AIM doesn't specify a minimum number of shares in public hands.
There's less regulation and less ruling.
So less regulations, the rule book's much shorter, there's only about 40 rules, and perhaps we can come on to some of those a bit later. So designed for smaller growth-oriented companies, but the exchange realized that many of these companies were entrepreneurial driven, and perhaps the people involved in those companies didn't have sufficient background and experience to run a public company. So one of the other ways that they distinguished the market was to create this role of nomad or nominated advisor. The nomad role is very, very important and can perhaps be illustrated by the fact that if a company, for whatever reason, loses its nominated advisor, the company's shares are immediately suspended from trading on the stock market.
There's nobody to oversee the regulations.
Precisely, that's exactly the point. So there's no one to oversee the company's activities
from
a market standpoint. So there could be some risks there, particularly in light of the fact that these companies are smaller, perhaps earlier stage companies, and perhaps deemed not to have the experience of some of the more established companies on the main market. So a rule in there that says if you lose your nomad for whatever reason, your shares are immediately suspended from trading. Guess what? It gets worse. If you don't replace your nomad within 30 days, you're delisted. So you have to go through the process.
Can it be hard for a company to find a new nomad at times? Or?
Well, there are about 90 nominated advisors operating in the City of London. So depending on the reasons why the company and its nomad came to part, then ordinarily there wouldn't be any difficulty in finding another nomad. But again, I think it's important for the incoming nominated advisor to fully understand what perhaps went wrong, if anything, with the previous relationship. Nothing may have gone wrong.
No court of law, perhaps.
Well, possibly, well, hopefully not. But perhaps most commonly companies outgrow their existing advisors, perhaps as they're growing in size, they need to raise more money, and some nomads which have related stockbroking arms to raise money. Some brokers and nomads are better at raising large sums of money than others. So sometimes a company outgrows its nomad and broker and wishes to move up.
Okay, so
that would be a good reason.
Yeah, so let's just look at Grant Thornton. How many companies do you look after at the moment as a nomad?
We look after about 50 companies, although over the years we've acted as nomad to 250 companies. That makes us one of the most active nomads in the country, and indeed the most active independent nominated advisor. That means we do not have a brokerage capability, so we're unable to sell shares into the market, and that's a decision that I've taken deliberately to differentiate ourselves from others in the marketplace. And also I believe that companies should have a choice of having an independent nominated advisor, because the market is very much characterized by nominated advisors which can also act as broker, and that's entities that have direct access to funding.
Now, if we look at in practical terms, how does Grant Thornton get involved with the company's RNS announcements, and how can you check for whether or not the announcement is reasonable or accurate?
There are a couple of comments I'd make there. The directors of a company are obliged to make announcements about certain event in the company's life. So, for example, if a company decides to appoint a new director, or if a director resigns, those matters must be announced to the market. In many ways, those are quite straightforward events. So if someone resigns, the company notifies me.
You're not going to get too involved.
Well, exactly. So there's not too much required if a director resigns. So the announcement that goes out is pretty straightforward. It could be quite short, saying that Mr. Smith has resigned with immediate effect. In my role as nominated advisor, however, I would probably be digging a little bit under the surface to see what the reasons were for Mr. Smith's departure.
So playing detective if you have to.
Just to make sure that there's nothing going on that's perhaps untoward. And similarly with new directors coming onto the board, we have a role as nominated advisor to fully understand the person's experience and expertise, and to make sure that the individual is an appropriate person to be a director of a public company. So we, in those situations, will do diligence into the individual, and indeed there will be a full announcement about the individual and his or her previous activities.
Mm-hmm. So in addition to looking at the regulatory news of companies, how else might you help companies?
Some announcements, just perhaps to dwell on the announcements for a moment, there are some announcements which are quite straightforward. There are other announcements which are more difficult. The directors of a company are under an obligation to announce any matters which, if they were made public, would have a material or significant effect on the company's share price. And sometimes that's not always obvious to people. So the way that we help companies in that respect is to have an open dialogue with the directors to ensure that they're keeping us fully apprised of all the developments in the company's business. And through that dialogue, we're able to determine which events should form the basis for a public announcement.
Mm-hmm. So what are the key characteristics of an effective nomad, and how should these characteristics give confidence in the market for the quality and reliability of regulatory news?
In my opinion, the key characteristics that a nomad must possess are probably experience. So if there are directors of companies listening to this or watching this, if they're thinking about choosing a nominated advisor, what does the nomad have sufficient experience? So how many has he done? Has he acted for lots of public companies in the past? Has he got experience of acting with AIM companies? So I think experience is very, very important. Expertise, I think that's another important area. So what kind of people does the nomad have on the team? The team should include, in my view, corporate financiers like myself. I'm a corporate financier. Are there people there who've perhaps had regulatory experience? So on my team, I've had people who've worked at the London Stock Exchange. I've also had people who've worked at the takeover panel, which is an important feature of UK public companies. And for companies in the mining sector, I would expect a nomad to be able to demonstrate experience and expertise in the sector. So I employ a geologist to help us with our mining companies.
Okay, so what sort of challenges might a nomad face when we look at the mining and exploration sector?
I think probably to answer that question, you have to rewind a little. Almost to the time where we're thinking about taking a mining company to the market. When we're deciding whether we should act for a company at the pre-admission stage, I think there's two things that we're thinking about. Firstly, is the company suitable for admission to the market? And to try and break that down, I guess there are two things that come to mind. Have the management of the company put together a business plan, I suppose, that is coherent, makes sense, is it realistic, and probably more than anything else, does the nomad believe in it? And secondly, looking at the management team, does the nomad believe that the directors and management team have the skills and expertise to bring the vision that's articulated in that business plan into reality? So that's assessing suitability. With mining companies, part of that assessment would include, again, trying to look at it simplistically. I want to know if the company has good title to the assets that it purports to own.
Have you had experience where they haven't had title to assets, some companies?
No, because we do proper diligence, and I'll come on to that in a second. So, but I need to know, from a helicopter standpoint, helicopter view, do they actually own the assets that they say they do? And do they have the licenses and the rights to exploit the assets the way that they want to? So how do I satisfy myself about that? I employ lawyers on the one hand to ensure that the company does actually own the properties, the assets, and secondly that they have licenses that say they can exploit the asset the way they want to. And on the other hand, in addition to owning the property and being able to exploit it, that there's actually something in the ground. So that's when we would perform technical diligence. We'd have an independent, competent person, is the term that's normally applied, who checks to see if the company's reserves and resources are actually what the management are stating that they should be. They're stating that they are.
Is it a lengthy process, or can this be fast-tracked?
The admission process can vary, but on average, probably takes somewhere between 3 and 6 months. And that's 3 and 6 months from the date that the company employs a nominated advisor and a broker. So that's getting the company to the market. Once the company's on the market, particular challenges that a mining company might face would be to advise the market of resource updates. Again, these would have to be performed by a competent person and should always be carried out under a recognised standard. So, for example, JORC or SAMREC. And from my standpoint, I'd like to see the directors using the same standards throughout the period that it's on the market.
Okay, what's the best thing about being a nomad from your point of view?
The opportunity to help growing companies get to the market, to help them raise the funding, to bring the management team's vision into reality. I'll give you an example. One of our clients, Archipelago Resources, we took it to the market in 2003, I think. Its initial market capitalisation was £8 million. It's been back to the market on 13 separate occasions, raised £100 million to further develop its business, and currently has a market capitalisation in the region of £220 million. So that's a success story. That's something that I get a buzz out of, and I love working with the board.
Thank you very much, Gerry. And you've been listening to and watching Gerry discuss the role of a nomad.